Good morning, investors and traders. This is Naeem Aslam live from London. In today's segment, we will be looking at the factors which are really driving the markets higher and some of those obstacles which are also keeping the market from its all-time high. My name is Naeem Aslam. I come with a wealth of 15 years of trading experience. During this period, I have worked as a hedge fund trader for Bank of New York Mellon, in equity trading in Bank of America, and currently working as a chief market analyst for EverTrade. As always, we will look at the price action, what happened overnight. Of course, Asian markets have pretty much closed in positive territory because investors were building up the momentum. They were really building up on the momentum that we've experienced for the last few days. Of course, this particular week has started on a very positive note with Biden winning the US presidential election. Now he has become the president-elect, while Donald Trump, on the other hand, keeps saying that he is going to win. The legal battles will continue, and perhaps there is a stronger possibility of civil unrest as well. Now, this particular element is very much keeping traders on the edge. And because of that, we are still seeing investors becoming a little bit anxious with respect to their upward positions or with respect to this upward trend. So what they are trying to do is that they're trying to scale their long positions, meaning they are not taking any more new long positions, and they're shaving some profit off. But this isn't an opportunity because the market fundamentals have changed enormously with the presence of Pfizer's vaccine. Remember, we heard that news on Monday when Pfizer came out with its vaccine news. And Pfizer isn't the only company. We are going to hear from several other companies as well, so with the likes of Moderna and Johnson & Johnson in the coming days. The news is pretty much imminent. So with that much known about this current virus, and despite the fact that yes, the coronavirus cases are still very much surging in Europe and of course in the United States, but we are a lot more familiar with the situation, so traders understand that the situation isn't that bad as it was at the start of this year. So any retracement in the equity market could be an opportunity. So where are those price levels? That is the question. Now, for me, there are two important price levels that we should be really looking at. For the S&P 500 index, which pretty much represents the wider, the broader aspect of a US stock market, there are two important price levels. Number one is the high from Monday, the price that they made. Secondly, the low of the last week. So this particular range, the high from Monday and the low from the last week, are the price levels where we should be really looking at. I primarily think that the market has gone too far and too fast. And that means very likely for this particular market to consolidate. And if consolidation continues, that can be considered as a bull case scenario. Why? Because that will form a bull flag, a pattern which will be just pretty much like that, and then that means the market can break to the upside. If consolidation continues and the market breaks to the upside, this could be an opportunity. So look for the prices within the 4-hour time frame for the S&P 500, for the Dow Jones, and then see if you can cash the price near its 50-day simple moving average. That could be an entry point. If not, then wait for the price to retrace towards the last week's low, near around that price levels. No one can really predict or pick the exact bottom or the exact price level. But as long as we can go near the lows of last week and put our stop losses just below that price level, this will give us a confirmation that we are close enough to find a better price entry. If we are wrong, no problem. We are happy to pay that stop loss and the market can continue its journey to the upside. That is all for today, and I'll see you guys next time.